Very good morning to you, and I'm Malcolm Grahamwood, and this is Core Finance, and today I'm doing another of my CEO interviews, and it's an absolute joy to welcome back Tony Durrant, who's CEO of Premier Oil. Nice to see you again, Tony.
Nice to see you, Malcolm.
You've been a busy man since we
last.
Good to be back.
Good to be back.
Nice to see you. First of all, maybe as before, you could give us a rundown for those people who don't know too much about Premier. I'm sure most people do, but a sort of overview of the company.
Yes, of course. I think the first thing to say is we're feeling very comfortable since I was last here, Malcolm, with a $65 oil price. And I think, as you've said in your publications many times, the oil market seems to be coming back into balance. And I think we can look forward to a period of relative stability going forward. That's a brave thing to say, isn't it, in the oil price? But we are an independent oil and gas producer focusing from a production point of view on the North Sea and Southeast Asia. Last year we were 75,000 barrels a day. We've got a very strong producing asset portfolio that's been doing consistently well for a number of years. We brought a field on stream in the North Sea just before Christmas called Catcher, and that will take us up to 85,000 barrels a day for 2018. So we've got some production growth to look forward to during the course of the year. And of course, at stronger oil prices, that's giving us more cash flow. We're in the process of effectively repaying the investments that we've made, particularly in the Catcher field. So our balance sheet is recovering and is going to be in a stronger position going forward. Then when we look for the longer term, we've got a number of projects, I'm sure we'll touch on those, Malcolm, that are progressing well. And as we get to the sanction point for those projects, which we hope will be in the next 12-18 months, then we'll be in a stronger financial position to go ahead with those projects when we look forward to the spending period to come, which is 2020 and beyond.
Excellent. Thank you very much for that, Tony. What I'd like to do now is, you mentioned portfolio. I'd love to go through 2 or 3 of these things in a bit more detail. So to begin with, let's have a look at Catcher, which I would have thought it's gone better than you even might have wished for. It seems to be in very strong position.
Yes, a rare beast in the North Sea, a project that came in on time and roughly 30% under budget. A nice Christmas present, first oil December the 23rd. As advertised, we've been in the process of ramping the field up to, we think, a plateau level of production around about 60,000 barrels a day. We're about 30,000 barrels a day today. The principal activity at the moment is getting gas export up and running. Until we have gas export up and running, we operate under government constraints for gas flaring. That should be done in the next couple of weeks, and that will enable us to accelerate the oil production or bring all the oil production on stream and hit the plateau rate a bit ahead of schedule, sometime, I would say, in the mid-April timeframe. The very encouraging thing, I think, has been the performance of the wells downhole, where they've all come up with high initial rates. To some extent, you'd always expect that, although several of them have been running for some time now. We've had up to 20,000 barrels a day from several of the individual wells. And I think we can say securely that we've got excess deliverability against the facilities, and we'll be using that over time to see if it makes sense to do some debottlenecking on the facilities and increase the plateau rate even higher. So all good so far.
So just because one of the questions here was that it's not at the capacity for the kit that you've got on board. It's obviously exceeded your expectations. Does that mean you have to put debottlenecking it and put more kit on board?
We certainly could do, and we're looking at that. The nameplate capacity of the vessel is about 66,000 barrels a day. I think what makes sense is for us to run the field at the existing nameplate capacity effectively for probably 3 to 6 months. We'll look at these debottlenecking studies. It's a cost-benefit analysis. The oil's going to come out of the ground. It can come out at 60,000 barrels a day for a period of years, or we could go for a more peaky profile. So we'll look at the costs and benefits of that.
Word on the street is that there might be a little bit more of Catcher available if you wanted it. Is that true?
I understand one of our partners may be considering selling, although I think they're probably selling their UK business as a whole. So we'll have to see how that process plays out.
But if it came in at the right price, it would be a common sense.
We would love to have more of Catcher because we're obviously a great believer in it.
Lovely. Can we move on to Tolmount? Because I'm excited about Tolmount. I mean, it's obviously a year behind, or 18 months behind Catcher, but the worry at the time might be an expense. I mean, it was a bit of a gift, actually, in terms of the acquisition that you made, and suddenly Tolmount was in there, in my view, but a very welcome gift as well. But also, given the costs that are associated with it, at a difficult time, maybe going through on the debt front, you've managed to do a fantastic deal, an innovative financing with infrastructure funds and so on. Perhaps we can hear a bit about that.
Yeah, sure. I think you're right. I think it has been a bit under the radar screen. Everybody's been focusing on first oil for Catcher. We acquired it, as you mentioned, with E.ON, which we completed the purchase of E.ON's UK assets in May 2016. The analysis of the project, the progress of moving from, in effect, a pre-development asset to an asset we're now about to sanction has gone well. We're, again, a great believer in Tolmount. The initial levels of reserve under the first development plan are about 500 BCF, but we have more wells to drill in the surrounding area over the next couple of years, and that we're pretty convinced will push the number up to 750 BCF, maybe a TCF of gas. And this is 40 kilometres off the coast of Yorkshire. It's a straightforward Southern Gas development, 4 wells, a dedicated pipeline into existing terminal infrastructure. So a relatively straightforward project.
Yeah.
In terms of funding it, you're right. We took the decision last year, really in parallel to our own refinancing arrangements, that we would bring in a funding partner. We've brought in an infrastructure fund. Of the net 300 million or so capex to Premier, the infrastructure fund will in effect pick up $200 million of that. I think it's an interesting structure. There have been plenty of infrastructure funds owning pipeline systems in the UK. I think this is the first where a greenfield pipeline system will be built, owned by an infrastructure fund. We're also getting them to fund the platform and to some of the terminal modifications. So a new structure, but one I think that makes a lot of sense for the E&P sector. You know, our expertise is in development drilling, subsurface work, and managing the projects. Infrastructure funds do what they do on the can and own the infrastructure, and are paid an appropriate level of return for that. So it makes a lot of sense.
Seems very fair. Yeah. Now, going a bit further down the road again, we've got Zama in Mexico.
Indeed.
Another surprise.
Great excitement in last year in the discovery in July. As we said at the time, one of the half dozen or so largest shallow water discoveries over a long period of time globally. So very exciting. We're just about to move into the appraisal phase. The structure of Zama is split across 2 blocks, our own block in which we have 25% and a 100% block next door owned by Pemex, the Mexican state company. So we've been sitting down and talking to Pemex about the appraisal program. The consensus is 4 wells over the next 6 to 9 months, and Pemex will probably begin that spudding either June or perhaps July.
How much is in there? Have you done the unitisation yet?
Well, nothing has been drilled on the Pemex side so far, so early days to answer that question. The structure does clearly go onto their block on the seismic data we have. The working assumption for cost-sharing purposes will probably be a 50-50 split or something like that, and then we'll see what the results of the appraisal bring on both sides.
And you've got rig contracts already out for the appraisal program?
Pemex have got a rig contract. We also, on our side of the fence, we have an option on a rig as well, and we're just discussing how to coordinate that with Pemex.
Yeah.
So that's very exciting. I might also add that it's not just Zama in Mexico.
Yeah, I was going to ask about exploration prospects.
Absolutely. We've got other exploration prospects already in the portfolio, but we've also got a very interesting licensing round coming up actually in the next 2 weeks. another shallow water licensing round with some blocks immediately adjacent to Zama. I think, in a way, we might be a victim of our own success. It's become a hot area, so to speak, for the oil industry, and we've got some strong competition for those new blocks in the area. But that, to me, can only add to the long-term value of Zama. So, in a way, it's a win-win situation.
I mean, you can't grumble about that. Now, having had a really good year last year, and you've got the 2018 looks to be equally a strong year with all the things we've just to talk about. I'm going to want to talk about Sea Line.
Indeed.
Always a favourite project of mine, but only now am I getting my chance to to actually say it will be your biggest project, assuming it goes ahead. You seem very confident. At the the analyst meeting that is probably as confident as I've seen you for a long time. So why don't you run us where progress has been made, where you got commitment from contractors and so on? Where
absolutely.
are you on Sea Line?
I mean, of course, the confidence in part derives from a recovering oil price, which means at today's prices, the Sea Line project is a very economic proposition, a very valuable asset to Premier. But as you say, we've also made substantial progress on pulling together the project itself. And I think the biggest point is really the supply chain. In the past, I suppose people have been a bit concerned that because of the physical location of Sea Line, it would be tough pulling together an appropriate supply chain, the logistics and so on. And that, I think, is something that we've now overcome and are very comfortable with. We've in effect signed up all the major contracts. Some of those are already in documented form. We've got letters of intent on the drilling rig side, on the well services side, helicopters. We're still working some of the other service lines with multiple contractors, but I think we know where we're going. We would expect to sign more contracts or letters of intent over the coming weeks. So that's coming together quite nicely, and of course that gives all our stakeholders, really, shareholders and lenders to the project, a much greater degree, somehow makes it more real, of course, if we've already got the contractors in place. We've made very good progress in the Falklands, with the Falklands government on the field development plan and environmental assurance plan. That's a sensitive point, very understandably so. In the Falklands, it's an eco-tourist economy, if I can put it that way, and we've done a lot of hard work over a period now of 3 years. We've just gone through a public consultation process on that. So a lot of elements of Sea Line coming together. The funding structure is important. The contractors I mentioned are contributing to the funding. It's good to see world-class contractors who've done thorough due diligence on the project being willing to contribute to the funding package. So we'll have about $400 million of contractor funding attached to the project. In addition, we're now talking to export credit agencies and to the banking world about senior debt for the project. That will take some time stitching together those funding packages. So we're expecting to be busy over the next 3 to 6 months on the funding package, whilst finalising the documentation for the rest of the project.
So you're trying to get that's the $1.5 billion of initial capex to first oil.
Yeah, absolutely.
So and that breaks down roughly, vendor financing, export plus senior debt and so on.
Yes.
And you're ahead of the game in some of those things and still running with others. So.
We are, and also there's an element of our own cash flow, of course, that we're reinvesting in the project, and we put some materials up at the analyst presentation last week, demonstrating how that cash flow profile fits into our own forward financial forecast.
So financial, so final investment decision this year, and then
we hope so.
Next year?
I mean, I don't want to get boxed into too much of a corner in terms of the negotiations to come. But yes, if things go smoothly, that's the plan, and then formal sanction and financial close on the lending into the middle of next year.
Right. I think that's pretty much sorted, Sea Line. I don't think I'm going to ask you any more because I think you've really covered it in some detail. There are two
Yep.
or three other things I'd like to talk about before we wind up. We're doing very well. Other areas for exploration? I mean, obviously you mentioned Mexico, but
Yeah.
you've got
So,
one or two places.
I mean, stepping back a little bit, Premier is predominantly a production and development company, but we've always viewed exploration as a way of filling up the hopper for future projects.
Yeah.
And of course, we've been very successful with Zama that we've just talked about. And the principle has really been proven basins where the acreage is under-drilled. And that can be through a variety of reasons, but I suppose the typical one is government licensing has for whatever been slow, or in some cases, as in Mexico, non-existent up until recently. So that's the sort of thing we're looking for. Of course, plenty of other people are looking for that as well. But we think we've been quite good at identifying acreage that meets that criteria, notably in Mexico, also in Brazil. We also picked up a very good block in Indonesia. It's a while since we've picked up new acreage in Indonesia, but we're very happy with that. We've had a couple of majors knock on the door already, so that's encouraging.
Indonesia is quite hot at the moment. There's
yes,
two or three companies putting a bit of money down in Indonesia again.
Yeah, well, of course, it's a massive oil and gas province with some very well-established infrastructure. The key really is finding areas of acreage where oil and gas is proven, but as a result of the government licensing process over time, one or two good bits of acreage have probably been missed.
So anything you're getting rid of? Any M&A, any disposals, any bits and pieces? I mean,
we are still tidying up the Eon portfolio that we acquired in 2016.
Yeah.
That's been very successful. I think the Eon acquisition continues to give.
Yeah.
We still have something like 20,000 barrels a day from that acquisition. We've more than received cash flow up to the acquisition price, and with the processes that we're currently underway, we'll also get the acquisition price from disposals as well. So, and we've had
every
Tolman.
which way.
So it's all been very good.
Over the period of the chat we've had, you've talked about debt and the balance sheet and everything else. So perhaps you could just give me a resume of where you were at the end of last year. You mentioned that all the good things here that we talked about earlier, and start repaying that. But what's the comment on them?
Absolutely, and I'm enthusiastic. Premier is enthusiastic about our future growth projects, as we've discussed this morning. But to be very clear, again, the years 2018 and 19 are years of deleveraging, repaying debt from the cash flow, especially from Catcher. So we look at the next 2 years of getting the balance sheet back into strong shape, both for our next refinancing, which will be in 2020 or 2021, and also selectively for investing in the new projects. To give you some numbers, our net debt at last year end was $2.72 billion. The analysts have us at somewhere between 250 and 300 million of free cash flow this year, 2018. In addition, we converted some convertible debt back in January, which has the effect of reducing the debt on our balance sheet by about $150 million as well. So you add those two together, Malcolm, and our net debt position by the end of 18 should be around $2.3 billion. And as I said, we would expect that to continue into 2019. That will still be the financial focus in 2019. So we will see further debt reduction in 2019.
Excellent. Well, we've covered a lot, and we've nearly got through our allocated time, I'm afraid, Tony. But obviously, at the end, I always ask, my way of asking it is, what would you like to see in a year's time? You sort of half mentioned that, but what would you say the vision for the shareholders is in the next 6 to 12 months? And
no, valid question. As you say, we've touched on most of the short-term news flow. I think ramp up of Catcher, the appraisal program on Zama, sanctioning of Tolmount, all in the next few weeks, I think. I think it's in everyone's interest, all stakeholders at Premier, that our balance sheet is back in shape, and $65 and the program I've mentioned gets us back in shape. And that's not just to the benefit of our lenders, of course, but it's also, I think, entirely consistent with the best interests of shareholders. And then as we progress these other growth projects, we'll make decisions about sanction. The spending really is after 2020, but we can afford to take a step back, as it were, and decide exactly how we want to structure those projects, how much equity we want to go in, and frankly, choose the best of them.
Yeah, and so you could go ahead with Sea Lion without farming any of it out, but still on the list of farming out prospects.
Yes, of course. In a normal situation, as you get to a sanction point, there's a decision to be made about how much exposure do you want to a particular project. And we've made that decision effectively with Tolmount in finding an infrastructure partner. That decision still needs to be made for Sea Lion and for Zama.
Excellent. Tony, it's been a pleasure to have you in the Core Finance studio again today. Thank you very much indeed for watching. This has been Tony Durrant, who's the CEO of Premier Oil. My name's Malcolm Graham-Wood. Look forward to seeing you again on Core Finance CEO Interviews. Bye now.
Thanks, Malcolm.